Hi guys, and in today's video we're talking about Graze. What is Graze? Graze is automated lawn mowing, for hotels and golf courses and things like that. You know, they pay people a lot of money to, push things around or sit on a cart. And this is the future. This is the automation of it. So, you know, the final day to invest will be April 13th. We're now 21st of April. So yeah, there's not a million days left or whatever. So I don't know when you're watching this, but anyway, we're in 2023 and they only recently, allowed internationals to invest. I've been, to be honest, following this company for years and I'm disappointed I couldn't invest earlier. Nevertheless, let's have a quick look at the rounds. Actually, before we do, maybe you haven't heard of Graze and you don't know if they're a legit company. They are a legit company. They're part of the same company or company group that's involved with Miso Robotics and Nomi Robotics. They're part of a kind of robotics group of companies, which I have faith in. And I emailed the company. I saw this round. I saw that they're growing, but I wanted to ask because the round was at $7. Has this actually increased since last time? They only did a round in November of last year, less than 6 months ago. And so I asked the question, and yes, it's increased nearly 3x from $23 million to $65 million. And there's financials and operating information circular, and then there's the investor site. So you can see that this is trebled, which is pretty great. And I think they use Dealmaker. That's the place to to invest. Let's go back. Excuse me. Let's go back and see. They're saying because their previous 2 rounds were oversubscribed, we know that not everyone could invest in the technology. Let's see if I can make this a bit bigger. There we go. So they're looking forward to a strong Series B. Check out the live investor Q&A webinar. That is happening in 8 days from today on March 29th. I'm going to register for that now. So it takes you to this page where you can put in your email. And you've got Justin. I think Justin, if I'm not mistaken, I think he might be involved in Miso Robotics as well. I'm right. This guy works for Wavemaker, and he is on. He's working with Miso Robotics as well. Anyway, that's the way to. You click on the link in the email and you get to a registration page, and I'm going to register. So saying Series B may be the final opportunity to become an early investor in Graze. At this time, there are no plans to raise additional capital. So another ask for people to invest. Now let's think about the rounds. Working closely with industry partners, Graze has uncovered a massive opportunity in the commercial landscaping market, and they believe that they're poised to transform this 129 billion industry. They've had 3 years of R&D, and they've reached an incredibly important milestone with the development of the latest, greatest version of the electric fully autonomous lawnmower Graze V3. Look at it, it looks pretty cool, to be fair. The V3 product series are engineering validation prototypes that incorporate autonomous mowing technology in a form factor designed to stress test our mowers for commercial manufacturing. The capital raise from Series B will allow Graze to accelerate product dev, move faster towards commercialization, and seize bigger chunks of the market opportunity in commercial landscaping. If you're able, please share this link, the Series B investment page link, with your personal and professional networks. Well, this is what I'm doing. I'm creating this YouTube video, and you can learn more about them. Now, let's go on the circular. Oh dearie me. Here we go. This is the circular that they sent. Wow, this is dense. I'm going to read this, but if you want to skip this part and you're not interested in the detail, that's fair enough. I will be doing a summary after this this look at or this analysis. So they want to raise it looks like $7.5 million, $7 a share. They're using this group, you know, to help them raise. Down one group, 90K is going to go towards them. That's all fine. Blah 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 blah. You third-party platform Wax, I think that's like Dealmaker as well. Investors will pay a $50 transaction fee to Wax, which is fine. If you invest a minimum of 1,000, that's 5%. But obviously, if you invest more, that fee goes down as a percentage of what you invest. Implications of being an emerging growth company. You know, this is all the risk factors. They're not required for detailed narrative analysis, yada yada. I'm not going to read that. If you're an angel investor, then you know, or should know, the risks of investing in early stage companies. They are very risky. But keep watching. I've got some interesting thoughts on why I think these companies are slightly lower risk than your average angel investment. Graze is building a fully autonomous lawnmower for the commercial landscaping industry. The team has partnered with the largest landscaping companies in the US, UK, and Australia to solve this core problem for the industry. As of 2021, they have non-binding letters of intent from these partners to purchase a total of 358 Graze units collectively, which represents a total of $32 million revenue opportunity for Graze. As of the date of filing, all LOIs remain in place, and the company continues to engage with early stage partners to plan eventual product delivery via binding purchase orders. Delivery will take place at a date agreed between parties after they manufacture the mowers at scale. Graze has not obtained any additional LOIs in 2022 due to the company's focus on product development, including software and hardware enhancements and product requirements for gamma and pre-production units. They remain on track for the commercialization units in 2022 with production scale in early 2023, which is where we are now. And this is the reason, I guess, for the raise. Labor costs form the majority of mowing expenses. You know, they have to pay someone. And they, you know, Graze will be able to eliminate 50 to 75% of labor costs through driverless machines, along with decreasing fuel and maintenance expenses with electric-powered motors. This should allow customers to jump from 10% margins to 40 to 50% margins. And I've mentioned this before in other videos. When a company like Graze or Mesa Robotics can come along and make business models themselves sustainable, companies all over the world will become interested. This is a real good, if they can deliver on this expectation, then, you know, every lawn mowing company in the world will be interested in this. You know, every golfing golf course, every park, every hotel, you know, everyone. So they're just talking about how they've been testing, and their products will go to market as an autonomous electric lawnmower with a 60-inch cutting deck, specifically for the commercial landscaping industry. I'm not going to go to the details of it. There are videos on it. So they're talking about Mainscape that has a combined fleet of hundreds of lawnmowers, and they're saying that that expects to grow every year. And their letter of intent has a contract, not a contract, but a letter of intent to purchase 200 lawnmowers, Graze lawnmowers. And if they're available, if they're able to produce an effective product, it is not hard to imagine that this company would eventually replace its entire nationwide fleet with electric driverless mowers. The top 100 commercial landscaping companies in the US generate more than 11 billion in revenue per year, according to Lawn and Landscape. And there, with Graze products, they believe the increased productivity and decreased costs and focus on growing the market share and growing profitable services. If you imagine that suddenly from about 1 billion profit out of that 11, it goes to 4 or 5 or 6 billion. The industry is going to be very interested in Graze. Arguably, the biggest challenge to acquiring customers for any new company is the lack of previous customers. Committing to be the first customer of a new product is difficult and risky, and a decision for an incumbent in any industry. Put simply, nobody wants to be the first to the pie. I'm really glad they wrote that in this deck, in this circular. In this instance, with partnership commitments from multiple industry leaders, Graze is well positioned to leverage those relationships into substantial and profitable relationships with the top 100 companies in the industry, as well as the numerous small and medium-sized landscaping companies that make up the majority of our addressable market. So there's risks here. Operating history, lack of, technology is not fully developed. They may need to raise additional capital. They rely on small management, future revenue, blah, blah, blah. It's based on non-binding letters. Product liability, tech reliability, third-party manufacturers, suppliers, additional capital. There's no shares, etc. This is the cap table, if you like, or this is the offering terms. I don't think there's an explanation of who or what at the moment who owns this. But the minimum investment for a lot of these companies is $1,000, which is what I made 6 months ago. It's now trebled for me. I'm not in a position to invest again at the moment. However, I probably would if I had the money. We have a limit up, blah, 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 blah. So what are they saying? They're being very negative because they have to be with these circulars, but I'm going to talk about the risks. And I'm going to talk about how I think they can mitigate these risks. So limited operating history, well, that's the case of all new companies. So, that's okay. Tech isn't developed. Well, they have significant engineering prowess and skills being part of Miso Robotics. This, I think, is a lot more of a simple technology than the technology that's being produced at Miso Robotics. So I think they'll be okay with that. About patents, they're going to get them. I'm sure a small management team, they can also tap into Wavemaker and, Miso and Nomi and all the other companies that are spinning out of Wavemaker. They're saying there are competitors. Yeah, there are competitors, but I don't know. I believe that these have a really good chance of growing quickly. Risk related to the securities, well, it's not an open marketplace. And, stocks, the price can go down, yada, yada. There are risks for this. Of course, there are risks. there are risks. Dilution, yeah, you can get diluted if the stock goes down, but if the size of the pie grows, doesn't matter if you're diluted, because you're in my mind, doesn't matter for me if I'm diluted, because the valuation increases. So a good example is 6 months ago, I put in some money and now it's trebled. If I don't put in the same amount, I will be technically diluted. However, my investment has trebled, at least on paper. Bum, 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 bum. So, they're a really small company at the moment. That the tangible book value post financing will only be $1 million, even though they'll be valued at 60 million. But, if they've got all these letters of interest and they're able to start in the next year or two to deliver on some of these orders, they will make lots of money. So there's a 7% dilution per share to new investors. Again, my strategy for angel investing is to find companies early. Now, I would have loved to invest in Graze in the first round, but I think they're on some kind of American platform. They may have been on Start Engine or some other platform that don't allow UK investors. And I'm actually a US citizen, but they didn't allow me because I didn't have a US address. As simple as that. Kind of pissed me off. But anyway, as I said, I'm not concerned with dilution because I'm not going to invest in every single round. That's just my take. I prefer to invest as early as I can. Had I had the money, I would invest in this round, but I might not invest in lots of future rounds. So the history of the company, it was incorporated in 2017. When they started, this robotic lawnmower solutions were small semi-autonomous mowers that were marketed to consumers. Small residential options are not suitable for commercial applications due to their reliance on above or below ground wires and or beacons for the machine to navigate safely. Through research and conversations with landscapers who have attempted to deploy small robotic mowers, we have learned the maintenance cost to reinstall the above mentioned guide wires require additional labor that reduces profit margins. And there's all sorts of other issues with these animals, people, weather, etc. So the dynamic nature and unit economics of commercial job sites do not allow for these small robotic solutions that require planned infrastructure for navigation. In other words, commercial job sites preclude the use of small mowers that bounces back and forth in multiple directions inside of a virtual fenced-in lawn. The touch sensor navigation causes these robots to mow turf in sporadic patterns that do not meet the standard requirements of commercial landscapers. Commercial customers require consistent parallel lines mowed that promote the health of the lawn and desired aesthetics. The Graze robot solves the most challenging problems faced by the commercial industry, including but not limited to widespread labor shortages, increased fuel costs, safety, equipment to operate, efficiency that leads to margin expansion and profitability for some of these commercial lawn companies. A solution to Californian law AB 1346, which is a ban on gas-powered landscaping equipment, a reduction in noise pollution, and a reduction in air pollution, because their solutions are 100% electric. Modularity, different attachments drive an ROI, which means I think they're modular, which means you can attach different things to make different sizes and things like that. So Graze has validated the problem, solution, and product market fit with one of the largest commercial landscaping companies in the US. This is via their letter of intent. They've begun working closely with the team on the development of the products, and the LOI outlines interest in purchasing 200 units for $30K each. Plus, this is interesting, a monthly recurring SaaS fee of $1,000 per unit. So wait a minute, they're going to make 200K a month as a recurring fee. That's amazing. You know, this is what I've been talking about with some of the other companies. Like, this is kind of very similar to the other robotics companies I've been thinking about. You know, if they can add a software as a service element, robots as a service, if you like, they can become wildly profitable. So assuming this 5 years of usable life per mower, just this one LOI represents 18 million in potential revenue. In addition to being the first customer for Graze, Mainstay pledged to help Graze build the right products for their needs. This allows us to take the product to market with fewer iterations and a clear focus on the need of the customer. In 2020 and 2021, the company obtained additional LOIs from a number of other leading landscaping companies in the US, UK, where I live, and Australia. As of the filing day, Graze has LOIs for a total of 358 Graze units collectively, which represents 32 million revenue opportunity for Graze. Now, interestingly, 358 times $1,000 is $358,000 a month, or over $4 million a year recurring revenue. And I would imagine the software element is very scalable, i.e., I don't know how many software engineers would need to service 358, or mechanical engineers. Probably not that many, maybe one or two. Software, maybe one or two, maybe more, maybe 3 or 4 ad hoc mechanical engineers. So let's say you've got 5 people and you're paying them 500K a year to service, but you're making 4 million, so you're making a huge margin. And guess what? I would imagine that you have a similar number of employees as you scale. So I think that is a really, really good business. Now, there's some warnings here that investors should know that these LOIs only represent potential revenue for the company. If they're not able to produce these products well enough, then the companies or the customers are under no obligation to purchase any of the products. But CEO John Vlay has over 35 years of experience in land maintenance, coupled with a penchant for technology such as automation. John oversees the strategic direction and the product development of the team, which is comprised of mechanical, software, electrical, and systems engineers from Wavemaker Labs, which is the owner or part owner of Miso Robotics. With John Vlay leading the way, the Graze team has already built multiple prototypes and integrated a robust sensor package focused on safety and navigation. In September of 2021, they initiated field testing in multiple commercial pilot programs across Southern California, including with our first customer, Mainscape, and a private golf course, Sundale Country Club. Okay, so the product overview is they use LiDAR, they have inertial measurement units, they have cameras and GPS and odometry sensors. When combined, these sensors allow our product to operate safely, efficiently, and mow straight lines, consistency, plan paths, avoid obstacles, provide visual inspection, and collect data. They go about 7 miles an hour. It's 100% electric, safe, and extremely smart. Bum, 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 bum. The market is growing at 7%. And in the US, they believe that it will grow to $140 billion domestically. The opportunity in the commercial landscaping industry is 70 billion. So as commercial landscaping service industry grows, so does the core offering for lawn mowing and Graze. Lawn mowing is a core component of all commercial landscaping. It's 46% of gross revenue is lawn mowing. So that's the equivalent of 23 billion per year from now, or 32 billion in the United States by 2024, which is next year at the time of filming this video. As the industry grows, the demand will grow for their products if they're good enough, which I believe they will be. I'm not going to go into the exact thing. I think manufacturing, I think we'll look at manufacturing. That's really integral. So in March 2022, about a year ago, at the time of recording this video, the company entered into an agreement with a manufacturing partner that, although non-binding in nature, it believed offered a path for scaled manufacturing. However, following initial announcements of the arrangement, the company determined that it was not the best interest to proceed with a manufacturing partner and will instead continue with in-house production until a suitable manufacturing partner can be found. That's an interesting way of looking at it. And if they can do it in-house, I think that's great. You know, they learn all of the intel, they learn the lessons. That's not a bad thing. The strategy for manufacturing will evolve with production volumes. We will focus on building our first commercially viable mowers in-house and plan leveraging contract manufacturers to meet mid to long-term demand as they scale. As they successfully deploy first commercial viable units in 2023, they'll shift the resources towards design for manufacturing cost optimization at the same time. They'll complete a selection process to partner with someone. Although pre-production volumes of approximately 10 to 50 units will be produced in small batches internally. This will allow Graze to scale rapidly. So they'll probably do 10 to 50 in-house. They're saying sales and marketing is going to leverage the fact that traditional margins are 5 to 10%. And with this solution, they're going to be 40 to 50%. You know, I think that's going to be an easy sell, to be honest. I don't think sales are going to be hard for this company. I think production, manufacturing, potentially maintenance is going to be hard. Competition. So they have competition from big players, John Deere, Husqvarna, Toro, Wright, who could potentially enter the market with their own commercial lawnmower. They've seen two examples of this with Wright manufacturers' partnership with software company Graze and Toro's acquisition of Left Hand Robotics. Both are gas-powered. Graze provides autonomous software and off-the-shelf sensors to retrofit Wright's traditional gas-powered ride-on mowers. It's kind of limiting at the moment. Left Hand Robotics, acquired by Toro, builds its own software and hardware. However, the hardware was originally built as a snowblower with modifications in 2020 to mow lawns. The system is gas-powered and has the largest form factor that we're aware of in the market, which limits its ability to avoid obstacles, to make tight turns, and it's probably too large to fit on the trailers used by most landscaping companies. We are not aware of any current commercial or prototype deployments of the Toro left-hand robotic systems. They also face some competition from early-stage tech companies building autonomous commercial lawnmowers. For the size of the market, they're surprised that there are only two companies that they consider strong competitors: Seed Robotics and Renew Robotics, or Scythe. I can't pronounce that. Anyway, Scythe or whatever, it came out stealth mode in 2021. It's got a larger form factor. Again, it limits abilities to avoid obstacles, make tight turns, etc. Which precludes some potential use cases such as mowing solar farms. This competitor side or seed or whatever is deploying mowers on a minimum order of 10 units paid work on a subscription basis. We believe Graze is at a similar stage of product development. However, Graze has publicly demonstrated market traction with the letters of interest, while this other competitor is publicly accepting pre-orders without any announcement as to value of potential revenue. Renew Robotics, this other competitor, is an electronic autonomous commercial lawnmower built specifically for vegetation management at solar farms and other energy facilities. Renew has a few unique technologies for their chosen use cases. Charging stations, etc. But they're looking at a niche space. They can't actually handle higher aesthetic standards, such as for golf courses. They're not aware of any pilot deployments of the Renew mower, nor of commercial success. Lastly, Electric Sheep came out of stealth in 2021, providing retrofit hardware and software it claims can be attached to any existing commercial lawnmower to make it autonomous with minimal training or integration challenges. They also claim to be currently running their first pilot program. Given the challenges of retrofitting autonomy technology on existing vehicles demonstrated by the Graze partnership, which uses a fully integrated approach, Graze are skeptical that Electric Sheep will be successful without an existing lawnmower industry leading partnership to integrate their existing technology. A reminder that Graze have 358 Graze mowers collectively over 5 years via a non-binding letter of interest. So that kind of compares them. So their two targets are large landscaping companies, which means they're large, long sales cycles, but generally one committed supplier could move hundreds of mowers purchased every 4 to 6 years. And they've got, the Mainscape customer and a few others. Small to medium-sized landscape companies, they may only purchase 5 to 20 Graze mowers at a time, but the sales cycle is much shorter. This is exactly what I've been finding in my job at WhatsApp Business. It is consistent with B2B sales globally that smaller companies have faster sales cycles. They're just faster to say yes, essentially. We have proven, Graze have proven their product market fit for this segment by signing a non-binding LOI with a small landscaping company for 5 Graze mowers. This company will also join as an R&D partner. Value is clear for these companies as their number one goal is growing market share by outbidding their competition. With Graze, they can lower their price point and win more bids without needing a larger workforce, which would shrink their current margins. Graze have received an influx of calls from smaller companies throughout their campaign, and many of them can't wait to get their hands on a Graze product. Golf courses and global landscapers. So let's look at this. In the UK and Australia, they've partnered representing 120 mowers. Imagine if they localize their marketing and their products. I'm sure people in, South America and, other parts of the world, Europe, would be interested as well. They have access, and this is what I was mentioning earlier about Wavemaker. They've got access to capital and customer introductions and a global network because of the Wavemaker company. They have the connections, resources, and product acceleration, the robotics knowledge, which is inbuilt in the Wavemaker venture capital company, which specializes in automation and robotics. So, Future Labs, which is also part of Wavemaker, has been involved since the start. They've been loaning them money, and they own money as well. Let's just quickly look at the operating results. Spent 7 million on R&D and 700k on marketing, roughly 500k on other admin and general expenses. And 6 months ended June 2022. Operating expenses was 6 mil, which is an increase. But they believe they remain on track to validate first commercialization in 2022 and scale production this year, time of filming 2023. So, this is interesting. They've got backing from, so they've got James Jordan is the owner, I believe, of Wavemaker, and he's involved, and he's giving the company a day a week of his time, which is great. So I think they've got a good team. They've got John Vlay, who's the kind of green and landscaping partner, leader, CEO. He's the key person. James Buck Jordan is very heavily involved in robotics. So I think he's a very essential part of the team. We've got a CFO who's managed for Ally and Wavemaker, and is a smart guy, has got a degree in applied mathematics and computer science, and worked at Deloitte, and he's worked at Adidas as well, which is cool. So yeah, so it's very good here. People aren't getting big salaries here. Even John's on 150, but yes, I think there'll be ownership stakes, which I don't think are that important. I think it's important in a way that it's better that these companies do have stakes. Let's have a look at this quickly. So that's current liabilities. Don't have a lot of cash. They've spent cash, which is fine. They haven't got the invoices for 2022, but I guess that's one of the reasons why they're doing this raise. So yeah, they're spending about 8 million a year. To be honest, if you think about the opportunity, this company could easily be making 10 million recurring revenue a year, which is mostly going to be this robots as a service. I think if they can execute, they can easily be making 10 million a year. It's just talking about options and the share plan of Future Labs, which is one of the funds, if you like, probably of Wavemaker, which helps fund this company. Okie dokie. It's been quite a long section of the video, but I do think it's important to look through these things. I don't see any additional major risks. It's always risky investing in angel startups, especially early stage companies. But for me, Graze has a lot going for it. It has the letters of interest. It has a lot of things going for it. It's got the 358 lawnmowers. It's got lots of mainstream, large commercial landscaping companies that are very interested at the moment. What are the key challenges? I think the key challenges are making sure they keep the team together and they can manufacture high quality products and services, high quality lawnmowers essentially, And, if they can crack the product nut, then there is nothing stopping them selling thousands of these units. And remember, they're $1,000 a month. If they sell 1,000 units, they're making $1 million a month, and a lot of that will be profit, I would imagine, because a lot of it is software and a lot of it is recurring revenue. I wouldn't be surprised if over 50% of that is profit. And if they sell 1,000 units, they're 30,000 units, they're $30,000 a piece. So it represents a huge amount of money. It's probably somewhere in the region of 100 million, more than 100 million, a lot more than 100 million. Anyway, I think once they crack that product nut, I think it will be off to the races for Graze. Obviously, there are risks with angel investing. If they can't crack the product and logistical nut, then it might not do well. But I have confidence because I think the wave maker company, that the robotics center there, and the roboticists and software engineers, they really know what they're doing. They've got Alloy Robotics, they've got Mesa Robotics, they've got Wing Zone, I can't remember. They've got so many different companies there that have on the cutting edge of robotics. So I believe these guys can do it. And although there's risk in investing in early stage startups, there's also potential return. And if they can sell 1,000 of these units, let's say in the next 5 years, they're going to make 30 million just from the sales, and then they're going to be making 10, 15 million a year recurring revenue. So this could be quite good. And there's nothing stopping them selling way more than 1,000 units. If you imagine that the mainstay companies and the mainstream commercial landscaping companies they're talking to at the moment would probably order more than 1,000 units, right? Just in the US. I don't know how many lawnmower people that the employees are currently working. We can have a look, actually. I can try and see. Actually, just looking at it, I'll try and look to see data on how many lawnmowers are in the US. And I did see that there is another company out there. They don't look as good as Graze, but they are in the market. And these are called, it's the robotmower.co.uk, Daily Robotics Limited. But this is another competitor. And they are actually targeting commercial as well as residential. I don't think they're going to have the same form factor though, in terms of the aesthetics. That doesn't look to me like a very high grade lawn cut. So I'm not going to be too concerned about it. Anyway, I think they've mentioned a lot of the risks in the circular that I went through earlier in the video. I think it's very much asymmetric, this risk. I think that if they're able to produce the lawnmowers, then there's nothing stopping them doing very, very well. I think in terms of the valuation, it's pretty high, 60 million, but obviously if they're able to execute, then it will look like a small valuation. If they can start selling thousands of units and they start making hundreds of millions a year, then it's not going to look like a high valuation. Nevertheless, there is risk. Asymmetric risk is essentially when, if you put in, let's say $10,000, you've got a chance of losing that money, but at the same time, if you do well, it can go up 10x. And I think that's basically where Graze is. If it does well, it could go up 10x or more from here. But obviously, with this kind of investment and angel investing, it's always better to get in early because, I invested at the valuation of 20 million, right? So if it does go up to 600 million, then my investment's gone up 30x. And that's why, it's always better to, it reduces your risk as an investor the earlier you invest. And of course, the most common way of thinking about this is there's more risk early on. Yes, to a certain extent, there is more risk early on. But when all else is equal, i.e. you have a good team, you have good management, you have good, capital inflows, i.e. they can raise money, they have good, they have good systems in place. If you invest in the early stages, versus if you wait 3 years, the risks are basically, I believe when you have good people, good products, good services, and they can raise money, it's better to invest early, because you capture that growth early on. The risk is basically the same in my mind, but in a company that has a prototype versus ones that have got commercial letters of interest. The caveat here is that companies like Graze that have the relationship with Wavemaker and these funds, the future funds, etc., have, in my mind, a much higher chance of doing well, because they have the backing, they have the people, they have the experience of commercialization and taking robotic solutions to market. I hope you found this this video interesting. My background, if you don't know me, is I'm in marketing. I work for this company here, WhatsApp, and I've been investing for many years, since 2007, and I started angel investing in about 2020, shortly after some experiences of shorting the market, which were very interesting. So I've done a range of investment. Anyway, I hope you've enjoyed this video, and check out my other videos. If you're interested in Graze, you might also be interested in some of the other partner companies that are involved in Wavemaker. So that might be Nomi or Ally Robotics, which builds robotic arms, or indeed Mesa Robotics, which builds robots for the restaurant industry. I've got similar analysis videos about all of those companies, or I think most of them, if not all of them, on this very channel. So make sure to check those out. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next upcoming video, which definitely you should check out. Take care.